Listen up, because this is a story about a stock in serious trouble. I'm talking about MicroCloud Hologram, a company that started the year trading at over 70 bucks a share. Today, it's barely clinging to life at $2.49, a drop of almost 97%. That's right, folks. If you bought this stock at the beginning of the year, you'd be sitting on a loss bigger than a Texas oil well fire. Now, some of you might be thinking, Jim, is this a buying opportunity? Is it time to be greedy when others are fearful? And normally I'd say maybe. A steep drop can sometimes signal a chance to buy low, but in this case, I'm waving a giant red flag. This isn't just a dip, it's a full-blown stock market plunge, and there are some serious warning signs flashing all over this company. So, what's going on with MicroCloud? Well, for starters, they just announced a $28 million convertible notes offering. Translation, they need cash and they need it fast. Convertible notes can be a quick way for companies to raise money, but they can also dilute the value of existing shares. Not exactly a vote of confidence, is it? And then there's the reverse stock split. On October 9th, MicroCloud did a 1-for-20 reverse split. That means for every 20 shares you owned, you got one share back at a price 20 times higher. Sounds great on paper, right? Wrong. Reverse splits are often a desperate attempt to boost a failing stock price and avoid getting delisted from exchanges. Let's take a look under the hood at MicroCloud's financials. The company currently has a market cap of around $21 million. That's tiny, folks, especially for a tech company. Their average daily trading volume is also anemic, which means there's not a lot of investor interest, and their price-to-book ratio off the charts. Now, I know some of you love a good value stock, but a sky-high PB ratio like this usually means one of two things. Either this company is about to discover the fountain of youth, or the market has completely lost faith in its ability to generate any real value. And I don't see any fountains of youth around here, do you? Section 4. Red flags abound. Short sellers and institutional apathy. Here's another big red flag. Short interest in MicroCloud has skyrocketed by over 330% recently. What does that tell you? It means the big money, the hedge funds, the guys who smell blood in the water, they're betting this stock is going down even further. They're shorting it like crazy. And if that's not enough to make you nervous, consider this. Only about 2% of MicroCloud stock is held by institutional investors. That's right, the big institutions, the mutual funds, the pension funds, they're staying far, far away from this one. They know a sinking ship when they see one. Section 5, don't get caught holding the bag, look elsewhere in AI. So, what's the bottom line? MicroCloud Hologram is showing all the classic signs of a company in deep trouble. The stock is plummeting, they're desperate for cash, and the smart money is running for the hills. Now, I'm not saying there's anything nefarious going on here, but I am saying there are a lot easier ways to lose your money in the stock market than by gambling on a company with this many red flags. The AI sector is hot right now, but there are plenty of other fish in the sea. Look for companies with solid financials, strong management teams, and real products that are actually selling. Don't get caught holding the bag on this one.